onto the Hangout well.
Hey.
Hey guys.
Hey guys, so we're here again for another Whale Club Hangout. This Whale Club Hangout 31. We're really happy to have the guys from CoinFloor here. We got Mark Lamb, the founder, and Obi Noosu, the managing director. Today we're going to go over what they see from the institutional trader side. They're also very curious as to what us as active traders want from exchanges and what kind of products they can offer. So Mark and Obi, thanks for joining us today.
Thank you.
Yeah, thanks for having us on. It's great to be here.
So why don't we just start for just a brief intro. Why don't you tell us how CoinFloor got started and kind of how the progression went to getting here today.
Mark, do you want to do it?
Yeah, sure. So we started out just as Bitcoin enthusiasts in the space, noticing kind of a deep need for an exchange in the UK. There weren't really any solid GBP to Bitcoin exchanges. There were a few, but some of them were kind of coming and going, and we wanted to just create a solid place for GBP Bitcoin liquidity to centralize and people to trade Bitcoin in the UK. We kind of took that approach and went live with it and started gathering volume, and basically towards the end of 2014 we noticed, and Obi was a big part in noticing, a lot of the majority of our customers, and I guess you can take it from here,
but a significant percentage of our customers were regular buyers of Bitcoin and regular active members of the customer base, and they were brokers.
Yeah.
So we decided to double down on brokers and corporates as well as a customer base. And from the end of 2014, beginning of 2015, in the UK market, we saw a lot of growth from there.
Yeah.
You can see it from our from stats on sites like Bitcoin Average, etc. But we have, for basically since throughout 2015 and the beginning of 2016, have been growing at about 68% plus quarter on quarter, growing our market share in the UK from below 5% of the market shares measured by Bitcoin Average to now, I think last quarter we were over 25% averaging for the quarter. And we've effectively allowed us to go top down, so dealing with high institutional, corporate, and high volume, high net worth individual and broker clients. And then from that, we've more recently built a platform to allow some of our broker clients to service the retail client base. And the reason why they can do that better than others is that they have the time and experience and passion to be able to field all the questions that the normal retail customer needs to be answered before they can buy Bitcoin, and without us as a company incurring the cost of answering those questions properly. So that's our model, and we're looking to continue to. The other reason why it's really useful to get feedback and to focus on the top end of the market is you get really high quality feedback as to what you need to do to expand as a business, and that's why we want to now look at having conversations with you guys and learning from the more professional active trader community as well.
And that's been our strategy. I mean, we're in the beginning we tried to listen really closely to what the institutional traders and market makers and those types of firms wanted, and we just said, okay, well, let's deliver what they want. Then with the brokers and high net worth, we've done effectively the same thing, built a platform that reduces a lot of the risk of being a broker, and we're now, we've been listening a lot to what consumers want, buying from these brokers. We're now trying to just do the same thing with retail day traders and active Bitcoin traders. We don't know we don't know much about that market. We're just trying to learn, and our view is if we take the advantages that the existing focus has given us and take those to the day traders, and if we just learn as much as we can about the product that day traders will want and active Bitcoin traders will want, hopefully it can be useful to that community as well, like it has been to our brokers.
So high level, we are now the most. We're still small change, and we want to grow. But we are the most liquid GBP to Bitcoin exchange.
Yeah.
And we want to leverage that in ways that traders and our existing customers will find useful.
So, just coming back to institutional traders, institutional clients, I think this word gets thrown around a lot in Bitcoin. Can you, from your perspective, kind of give us what that looks like in the Bitcoin space?
Yeah, I mean there aren't that many institutions in Bitcoin. The ones that are kind of, there's some market making firms, there's some larger financial institutions that are kind of buying Bitcoin on behalf of their clients or whatnot. But ultimately, Bitcoin is more of a retail market. The high net worths are active, and there are some very active brokers and some very active corporates. Corporates that maybe need to use Bitcoin for sending money abroad, need to cash out Bitcoin for receiving money into the UK. But in terms of, I mean, you were throwing around the term Goldman Sachs. I mean, we're not aware that someone like that is in Bitcoin yet in terms of actually trading it. And I think it will be a while before a bank like that is, that's as kind of fairly institutionalized and in with the establishment will be trading Bitcoin. But there are some players in Bitcoin, and there are more players getting interested all the time. But ultimately, it's more of a retail market. There's more corporates and more high net worths and more brokers rather than kind of the super large investment banks.
Sure, and those institutional investors, more so institutional traders, you're seeing more of that on like the market making side versus kind of a BlackRock big institutional block buy, correct?
Yeah, I think. Well, I mean, we do have also.
Yeah, we have some large block buys from asset managers. But if you saw BlackRock doing a large block buy because they needed to support clients because they were doing like an ETF or something,
mm-hmm.
or a managed fund, you'd probably see that managed fund in offering documents to investors. So.
Yeah, I think the reason I bring it up is, it wasn't that long ago. I remember the Wall Street Journal article where it talked about DRW trading. I think Citadel was doing some testing, and the circulation of that content was, hey, the institutions are coming, and I think a lot of people get an idea of kind of more of a BlackRock. The institutions are buying, but really. These institutions are basically functioning on market-making activities, and they see Bitcoin as a very virgin sphere that they can be some of the first entrants in, and they're sending out these kind of pilot programs to kind of get a feel of the market. Is that kind of accurate? Am I being accurate there?
I think there's part of that that's accurate, but I think there's also institutions that are trying to take a very bullish position on Bitcoin and just trying to accumulate coins. But I mean, at the end of the day, we only have so much. We have visibility into that, but we don't have. We're not like auditing these guys' books, so we don't have a huge amount of visibility into that. But it does seem like there's not. It's not just let's make markets here and there.
Sure. Well, and on those lines, that we can lead into specifically the active retail crowd is, there actually is a lot of synergy between like institutional market makers that are providing kind of liquidity at the front of the book, and then you have your flow, which will be essentially active retail. And at least from what we've seen so far in Bitcoin, is active retail has a very strong thirst for leverage. And you can see that in a lot of the high leverage platforms where they generate a tremendous amount of retail interest, sometimes to the detriment of the institutions. I think BitMEX, some of their spreads are a result of not having those kind of makers on there, but I'm assuming that the institutional traders that feel very comfortable with you are now looking for that order flow. So we're here now to talk about active retail and how you can basically provide a platform that active retail would be super interested in trading there, so that the deep liquidity is there, as well as the profit incentive and kind of the degenerate gambler mentality of active retail will want to trade on that platform, or your platform specifically.
I mean that's exactly correct. We've got a base of institutions. We've built up a network of brokers where we have the liquidity to be able to handle kind of thousands of coins in kind of OTC trades in kind of 1% above below spot, and kind of larger purchases going beyond that. So we've got good liquidity, and what we're interested in is how can we build something that active retail will love? Because, as you said, we're looking for flow. Our market makers are looking for flow. Our investors are looking for flow, etc.
So something that's apparent to me, I mean, you're talking about having liquidity, being able to move thousands of coins with very little slippage. Yet when you look at the platform, log into the platform and look at the book, it doesn't look like that, and the daily volume doesn't look like that. So it seems like there's a lot of stuff happening off book, which as a trader, you come along and you look at a platform, you want to see if there's volume, if there's depth, and currently it seems like that's invisible. My first impression when I look at the book is, well, there's not much going on here. I'll go somewhere else.
Yeah, I mean that's something that's been fed back to us before.
Yeah.
And we understand that. But the reality is there is actually more liquidity than appears on the book available. So if liquidity was taken off the book, we have the resources available to replenish that liquidity from the people who are providing these type of market making services.
And as requested, we can attract much more than is available. I mean, this is also where I don't think we've mentioned this yet, but we're looking at doing margin trading. It's something we're very interested in. We'd like as much feedback from you guys, and hopefully after this, the rest of the community. We'd like lots of feedback about that, because we want to build it, but we want to build it in a way that people will use it and take advantage of it. And there's so much liquidity that people can trade against, but at the end of the day, one thing we realize is if people have to, have balances have full balances, they're only going to be able to take so much advantage of that liquidity.
And then that could also provide a second mechanism where you have the invisible potential liquidity that we have available, but as you mentioned, it's not visible on the book. With margin trading, you can make some of it visible, because it could be made visible in the form of extra trades, extra standing limit orders on the book that are funded by margin. Leveraged margin balances.
All right. Before we we'll get down into margin trading and that in a moment. I just wanted to go over some just kind of basic UI UX that I noticed. Can you guys see my screen?
Yep.
Okay. So I just do a search for CoinFloor. Obviously, this is you guys, but I guess, and hopefully this should stand out, is if I'm coming to trade and I want a trading platform, when I see, just buy Bitcoins with confidence, I see, the thought that immediately goes through my head is this is a Bitcoin to fiat gateway. I don't get a feel of it being a trading platform. So that's kind of my initial, when I first saw this, that's what I thought. So if your guys on SEO and keywords, if you're going to move towards an active retail exchange, you're going to want to you're not really an exchange, you're a trading platform. And that's the way you should view it. because that's what active retail wants. Is they want a full service trading platform. They don't want to just simply exchange X for Y or Y to X. That makes some sense.
It would be better to say, trade bitcoins with confidence.
Yeah, I suppose that's really good feedback. I suppose because we are the most liquid exchange for GBP, we've struggled with the fact that we have multiple different customers effectively.
Yeah, it's tough.
And so maybe some of the customers just want to come in and use the broker platform experience where they come in, buy, and get their Bitcoin, and they set up automatic withdrawals so that once they buy, the Bitcoin literally gets swiped out automatically within a few minutes to their own wallet, and then you'll have other people who increasingly want to trade. So what we'll have to do is think of a way of making sure both parties.
Well, in all fairness, there are institutional traders on Bitfinex and Bitstamp and OKCoin, and they all bill themselves as trading platforms. I don't think they have any issue. Like Google searches, who goes Google searching? It's going to be the retail. Big institutions, they're already going to know who the players are. They're not going to be searching Google to find. You understand? It's a different.
Yeah. Although the terminology is more for our retail buyers, not for retail trade. I mean, there's a big distinction between retail buyers, which we are targeting now, and I think we're providing kind of a decent service through our brokers too, and the retail traders, which we're not targeting at all right now.
And we want to target.
Yeah.
Yeah.
Exactly.
So maybe that's the confusion. When I was saying
buy and trade. I mean, I think you have to have the words there, and I think you have to treat. You have to consider really the majority, the most people, the retail. So you really have to market it to them, and the word of mouth, and the business community will get you the other traders.
If I can touch on that point, and I mean, it's a compliment. I view it, guys. I'm a U.S. guy, so I'm pretty new to the CoinFloor experience. It's very similar, I feel, to kind of the way Coinbase has developed. You guys have a buyer segment you seem to be doing pretty well with it. That's what Coinbase did. Their .com site is a big, people that just want to get some Bitcoin, and they have a bank account they want to link it to. And as you say, they have many features of vault and auto withdraw and stuff like that. So that's a separate business from the trading platform.
Yeah.
And they've taken it, and I think they do it as like exchange.coinbase.com or something like that. I'm still not extremely. I mean, I understand that they're trying to separate that. I don't like kind of the exchange. You haven't really distinguished yourself as far as going into active trading and trading platform. But if I were you, I'd think about a whole different landing page and a whole different experience for that active retail, if that makes some sense.
I think that
Interesting.
I think ultimately we have to definitely consider that.
Yeah.
Because you may end up being, the risk is you end up being jack of all trades and master of none if you try to do it all in one place.
Yeah, and I just wanted to finish one other UI comment. I'm sure I'm probably not getting the full experience with just clicking on CoinFloor Exchange, and that's actually that was a good thing that you guys put in the bottom was just the exchange. That's how I define your exchange, though, by the way. So I mean, I'm active retail and I want to trade here, and I end up having to go to the very bottom to find the exchange tab. So I mean, these are things if you make a separate landing page and kind of a separate experience via the site, it's very doable. But just looking at your basic market depth order book, I don't know if Drac wants to weigh in here, but it's almost hard to read this. It's just so I'm not getting a good feel out of it. I mean, there's a whole bunch of things that I can go over that would make this a much better experience, but we'll probably just kind of, I know you guys are just getting into it, so I don't want to spend 20 minutes telling you how you can make your order book look pretty.
Okay.
Yeah, we're happy to take those comments offline if you think it'd be more efficient that way.
Yeah, no problem.
We're definitely interested in that.
Yeah.
I definitely side with VIX in that CoinFloor does have a completely different feel to, say OKCoin or Bitfinex or whatever. It doesn't feel like an exchange. It's kind of, and things are hard to find. So I think you really need to consider the entire, redoing the entire experience.
Okay.
Yep.
All right, so let's move into basically margin trading, and how about we start with kind of what your guys' idea is first? Like, what are you thinking about that and that angle? How are you going to provide margin? Is it going to be centrally sourced? Is it going to be peer-to-peer? Are there regulatory issues with that? What's kind of going on in your guys' heads as far as kind of that initial step?
Okay. Do you want to?
Yeah, sure.
High level, I did.
So high level, what we're looking at right now is something like a spot exchange, the existing spot exchange, but with leverage for GBP BTC. The rate we're currently thinking about is 3x leverage at first to start with the potential to go higher down the road, but start with 3x, and then. Oh yeah, and then where the loans coming from? The loans would be initially coming from a group of private lenders, but it's currently being envisioned as effectively a peer-to-peer lending book. So the idea, at least, is to open it up to anyone can lend, or many can lend, ideally, down the road. And we're kind of working through the regulatory issues with that, but that's looking like it's something that will be possible.
From a regulatory point of view, at the initial scope where we have private lenders who have the means to lend comfortably, and to provide the leverage at the levels that we're saying for our currency pair, we're comfortable with the cover for that.
Yeah.
Getting into other products or more complex products, we would have to spend more time to analyze that, the viability of that within the UK.
Understood. And yeah, my understanding, at least from a little bit of a US-centric point of view, is if you can get basically accredited investors that are willing to put up that collateral to be used for to provide leverage and be the loans that that's basically, if you got the source of funds there, that's great. I know people that definitely love the Bitfinex peer-to-peer system, and I think a lot of people try and work that way. It's just a matter of if the regulatory apparatus is going to allow that.
We'd like to be peer-to-peer lending. That's definitely preferable. Just from it increases the amount of loans you can get in the system because more people can lend.
And go ahead, sorry.
If someone's an accredited lender, it's easier.
Yeah,
to begin with,
definitely.
and luckily we have access to that type of partner or customer. So we're starting with that first, and then but the platform is being architected in a way where it can support multiple lenders if we at the appropriate time.
Got it. And I know I'd spoken with you a little bit off air about some of the more complex products and derivatives that you've alluded to. I do believe that a margin spot exchange is still something that is needed, and it sounds like you guys have all your ducks in a row to do that. So I definitely can't advise that that's not a good idea. I think it is. The question is, will active retail be extremely interested in that product? And I'll let Drac come in here because, we've been trading on 20x leverage for quite a long time, and to see a new spot exchange, and namely a spot exchange that now is allowing margin, isn't extremely appealing to us, but I still think it's something you guys should do because it sounds like it's a you've already have it all set up. I mean, you have the liquidity for the loans. It's just an easy step up to some of the stuff you're providing already. A lot of that side of things, getting the UI UX experience correct, that we can go over in detail off air or whatever. But Drac, what do you think about that?
I think it's quite exciting, especially to have it in another pair. And I'm not overly worried that the leverage is low at the moment, because I mean BTCVIX is only, I think it's 3.3x, isn't it? And they have a huge amount of lending activity. And if you can get, the thing that really excites me personally about these systems is the peer-to-peer lending, because exchanges, I know this is a terrible thing to say, but exchanges become a place where you can store, fiat if you so wish, and earn a better interest rate than the banks. So I think it's a very good contribution to the ecosystem. So I would really like to see it. Yes, and of course I'm in Britain, so.
I suppose the fact that it's the GBP pair that you would actually be potentially earning interest or margin trading on has appeal in of itself, being that they are the largest GBP to BTC exchange currently.
Can I just confirm that you would basically be adding margin trading onto the existing spot platform as opposed to opening a separate book?
Yes,
That's correct.
that's correct. And the rates would be the same, although we are earlier feedback and looking at rates above our current volume levels.
Lower fees, yeah.
So lower fees at higher volumes to be competitive at higher volumes with other
Trading platforms.
margin trading platforms.
Yeah.
Okay. Sorry, I'm getting a little feedback there.
It's not from us. Your microphone.
Okay. Yep. Thank you. Yeah, I definitely see where you're going. I guess that will maybe need to be addressed if you want to go down the path of having a separate landing page and such like that for the active retail side. And you guys will have to do some brainstorming as far as how you want to separate that. Yeah, I mean, now that I consider that you guys are the big provider of the GBP liquidity, that addition makes a lot more sense to me, and that'll draw in, some active retail that are probably on the sidelines or more UK centric. Have you guys thought at all about the derivative side of things? Has that even entered your mind, or you're just kind of taking it one step at a time?
I think the answer is both. We are taking it one step at a time. We have traditionally been a very conservative exchange, and that's why we have things like 100% cold storage and all this sort of stuff. And basing ourselves in the City of London, etc. But we are looking at derivatives, and we do see these compelling multiples and so on, and
20x, 50x, yeah.
and some very interesting growth rates for certain exchanges. But again, being in the UK and being a bit more conservative, we would have to spend a lot more time thinking about the legal aspects of that before we jumped. And this will be a first step. I think definitely be a first step for us.
Can I ask about the margin trading? So how do you plan to deal with margin calls and potential losses?
So we have an auto liquidation logic, which will people have a maintenance margin. If it gets close to the maintenance margin, their least viable position will be liquidated to the point they're back up to their original margin level.
Initial margin, yeah.
Their initial margin.
Okay,
And then
and what?
That'll keep happening.
Yeah.
Until they behave.
And if you did have a margin cascade, who would pick up the tab?
So As it's currently structured, obviously we have many safeguards to avoid that happening, but the lender would pick up the tab in that case. Currently, but we're open.
Currently, yeah.
We're open to hearing other options, and we'd very much like to hear the feedback of the community on that.
Well, I think currently that is kind of the standard, is if you're going to be essentially cleared, exchange, either the exchange is picking that up or the lenders. So, I mean, if that's an agreement you guys have with your institutional lenders, essentially, and they're okay with that, that's, active retail isn't really going to argue much against that. I did want to touch upon the fee structure currently. I do have the page up. I mean, my first basically thought is they're a bit high. I do see that you're structuring it in kind of a maker-taker reduction based upon volume. I think there's some things we can do here to probably make it a bit more appetizing for active retail.
We expected you'd say that, and we're definitely looking at reviewing what we can do there. To make it. I mean, we are the only real exchange for this currency pair, but we definitely want to look at that for to entice in some of the higher volume.
You've got to look at volume in the long term. I mean, I know the daily volume, at least what you're publishing your daily volume to be, is pretty low, but I mean, you want to be getting up to a point where you're doing several thousand coins of volume a day.
That's what we want.
Yeah. And I think what I'd really like to see is, if you have a tier structure that you need to meet, rather than the incentive resetting every 30 days, that it would be an incentive level that you earn. So by trading, you accumulate points or whatever, and then once you've got those points, you can get up to a certain tier, VIP1, VIP2, VIP3, like that, and each of those have different fee structures or different benefits. You can leverage more, whatever. I think those kind of systems work really well, and reward. They reward your clients. A long time ago on Bitfinex, I remember I used to be quite a high volume trader there, and I really disliked the fact that if I took a break, went away for 2 weeks or something, then I would lose my accumulated volume, and I would drop down to a different level, which I'd have to then build up to get my preferential fee rate, which was just annoying. So.
Yeah, this is the World of Warcraft generation that we always want to be in some kind of gamification where we're leveling up our characters. So if you can, I mean, that can be a whole part of an affiliate program as well as a trade volume program where you're getting reduction in trade fees, higher leverage, you're unlocking things. I know that's maybe goes a little counter towards the level of professionalness that some exchanges view themselves as, but to court active retail, that's really what we want. I mean, Drac can attest to how successful the OKCoin spinning wheel that spit out LTC was for them. I mean, that's the only reason I ever ended up owning any LTC.
It's true.
That's awesome.
But I think we're moving to a period now where you know how it used to be, people would come out of business school and they would, okay, let's start a business, and they would be doing everything according to how business school says, and all the talk would be corporate talk. There was no sort of real human to human, just how people communicate, and I think the world is now changing where people are just getting real and they're dropping all that corporate gobbledygook, and it works. I think we're in a different time now. So
great.
Okay.
I know Drac brought this up off air before we went on, but so as far as KYC goes and compliance, I know they're they're kind of two separate things. Even to create an account on CoinFloor, you have to basically go through the full KYC process. Have you guys thought about adding it at minimum demo level accounts, or are you able to offer different tiers based upon how much money people want to put on the exchange and stuff like that?
So I mean, we do have different tiers, but the lowest tier requires name, address, date of birth, no document to be uploaded, but it still does various checks. Again, we have different objectives. Other objectives are we are constantly looking at the UK regulatory space, so we have to be careful where we go in that regard. We have considered other options, but that are a lower level tier than the lowest one now.
Let me put it like this: what you're effectively asking people to do is, on the basis of your homepage, to give up personal data, without any courtship whatsoever. We don't even know what's on the other side. And really, what harm is there to allowing people to sign up, get in, they can look at the trade page, they can look at the account profile, they can look at all the different stuff, but they can't withdraw or deposit coins. So they can see everything, and then they can assess the platform and say, well, yeah, this looks good, or this has the features I like. We don't even know what features, what kind of order buttons you have or order types you have until you log in.
Yeah,
so
well,
I think you have to kind of consider at least like that people could log in but not actually trade or deposit, withdraw coins at the very minimum.
Yeah, I think that's a very good point. So when I was answering the first question, I was thinking from the point of view of verification to be able to trade. But from your suggestion, you're saying just at least be able to see everything, maybe not trade, but at least see how everything functions and
sure. I mean, you imagine if you're courting, you meet a new person. I mean, you don't just meet someone and just on the basis of looking at the face then decide to jump in the bed with them. You kind of have to talk to each other and have a meal, and I mean, it's like that.
Depends what part of London you're in, but yeah.
Well, okay.
But anyway, no, but I think that's a very good point, and
that's a really good point.
We can let people at least try everything, see everything. I think what you're saying is before having to go through the full process, and that I think is a very good idea. Should definitely do it.
I'd also add in there, your marketing team may appreciate that as well if you can get to some base level, sign up with email, because now you have an email list, right, of people that at least were interested at some point, and as you guys go through the development process, you're able to basically tell people what you're developing. So at this point, I don't even sign up because I know I need to provide all that, so you don't even get my email at this point.
Exactly.
Yeah.
I mean, it's almost like marketing 101. You'll see a lot of people sell ebooks or even vitamins and all these kind of things. There'll be some video like presentation or a landing page that will say, give us your email address and we'll send you a PDF or a video of whatever product it is. And this is, you haven't got the sale yet, but you've put the person in the funnel, and once you've got them in the funnel, then you can start dealing, selling to them.
No, I think that's something we definitely want to take away and look at doing something about.
So ideally, where we would love to see every exchange go is for as long as it's not specifically required by regulators to have crypto-only trading, non-KYC. So the landscape at the moment, Bitfinex doesn't need to know anything other than your email address for you to trade fiat in and out. Coins in and out. That includes, by the way, selling coins on the exchange and lending out the fiat balance. Right? The only time they want to know who you are is when you're withdrawing or depositing fiat. Then you've got the likes of OKCoin, who require your name and your date of birth and passport number as a minimum. to use the platform, but they don't require verification. And then according to what you do, whether you touch fiat, then they need to full verify. So I mean, my ask would be to look at also those options, to do the minimum that's required until you're actually asked to do otherwise by the regulators.
So that would be, from a personal point of view, that would be my preference. It will also just operationally be easier because we don't have the extra cost and risk of holding personally identifiable information. Yeah, it's something we've talked to lawyers before in the past about.
And it also, I mean, also,
and it's something we can just look at again, definitely.
Also, not everyone in the world has KYC docs. I mean, this is something kind of the wider world just kind of often forgets, but like most people in the world probably, or at least billions of people don't have those and will never be able to pass KYC. So
well, it's actually, I mean, even in Britain, even in America, they talk about requiring ID for voter registration, and now in the UK they've brought the right to rent means you have to provide documentation, just to be able to rent a house, and lower income people don't have passports, or they don't have the money to get a driving license or whatnot. I mean, and there are hundreds of thousands of people in that situation. It's not even minority, like small, insignificant minority. It's a very significant number of people, to the point in the States where they say it actually can affect, voting outcomes. So you're very right to say this, and I think when you discuss with regulators, you also need to, discuss financial inclusion in that sense as well. Maybe there are lower limits which people can operate at. If someone's dealing just in a few bitcoins, 10 bitcoins here or there, then it doesn't really matter. Even credit cards at the moment, prepaid credit cards, you can, have a few $1,000s balance on them without any KYC.
Although that's being locked down, prepaid credit cards post, this is a side, but because we spend a lot of time talking to the FCA and so on, prepaid credit cards are going to be locked down in Europe far more than Bitcoin will be over the coming 6 months or so.
Sure, but they'll be looking at reducing the balances, but they won't be removing, because of financial inclusion, they won't be removing, prepaid cards without KYC entirely. So that's what I mean. There is a gap, and you should try and operate within that gap.
Yeah,
even if it's like under £1,000 or under £500, whatever, that is inclusiveness, and Bitcoin is about inclusiveness. So.
I mean, from a personal point of view, that's something that has attracted me to Bitcoin. So it's definitely being able to allow people to access Bitcoin wherever they are is something I think actually we
both completely agree.
Very strongly about. So
we're here for this is separate to our exchange a little bit and kind of separate to kind of what we're specifically looking to discuss today, but relates to Bitcoin. We're here in Bitcoin for financial freedom and financial inclusion and financial empowerment, and that's kind of an uncensored currency is what is probably the only way of allowing those things. So kind of an uncensored, decentralized currency is the way to do that, and that's kind of why.
I think it's entirely relevant to the fact that you're exchange owners, that you have that ethos, because you look at, for example, Coinbase. There are videos of Fred and Brian talking in a completely different way, and other VCs that say, well, all of that libertarian stuff will just have to go away for Bitcoin to be successful. I mean, that's their outlook. So they're not so, they're not really batting for the team for the original ethos of it. So I think it's very relevant.
I completely agree. I mean,
we don't hold that view, and our investors don't hold that view.
Yeah, and I think we, as an exchange, have been very consistent in this viewpoint. Sometimes it's meant that some conversations with regulators and banks have taken longer than with other organizations. However, we've been pretty consistent. I mean, just recently, I was at a talk for the Bitcoin Blockchain Leadership Forum. Yeah. Most people were banging the blockchain institutional drum, and I was still continuing to argue the currently out of favor message in the city, but we think ultimately will be where they will come to view that Bitcoin is still the best option to go for.
Yeah.
And there's a number of reasons why, but mainly because it is an alternative to the fiat system. It is the first choice that isn't some subset of the fiat system.
Yeah,
and we just have to work out, and that's basically where we spend most of our time, working out how we balance the needs to continue to survive and thrive with one foot in the fiat world, but still allow remember why we're here and what makes Bitcoin and the whole cryptocurrency revolution a revolution.
Yeah, I mean, the job of an exchange is ultimately a bridge, so we have to have 1 foot in, 1 foot out, as it were. But we don't want to have 2 feet in the banking world or in the kind of existing traditional world, because then we're not serving Bitcoin at all. So we have to be, constantly aware and constantly thinking about, like, why are we here? Why are we doing this? Well, it's because Bitcoin is going to empower the world. Bitcoin is going to free the world. So,
and what makes it unique?
Yeah.
And what is the USP of the offering that you have? So privacy, as opposed to anonymity, privacy is one of those factors, and so that's a good idea, and we'll have to come back to the point of Bitcoin in, trade Bitcoin out.
Yeah.
We'll definitely look at that again.
I know this is kind of a deep rabbit hole we could go down, and I understand that it's a very, very difficult balance for a lot of companies, and I do respect that a lot. But to focus, really from your end on getting active retail traders, that's kind of, where Drac and I come from. There's really 2 main focuses. Drac and really a lot of this conversation's been on reducing friction. The easier it is for people to get onto your exchange and to experience what you have to offer, is kind of, it reduces the incentive you have to attract for people to clear that hurdle. So, it's either you reduce friction, you should be doing both, reducing friction and adding incentive. There's some exchanges that add so much incentive. I mean, OKCoin in the very early days of their futures platform and offering 20x leverage provided so much incentive that I didn't have a problem providing my passport number and those kind of things. It's not, that space has evolved now, and I have like another hangout later today with BTC China or BTCC, and I mean they have a 20x Pro exchange, and they're kind of like, well, try our exchange, and they have actually the same kind of issue that is going on here, where you can't even make a demo account without providing documents. So it's actually a step, more invasive than what you guys' initial tier is. And I was like, I don't have any incentive to use your platform. I know you guys are trying to do some things differently, but those 2 things really need to be in direct focus: increasing incentive and reducing friction.
Yeah.
And so we've covered somewhat, and we can take more of this offline, in terms of reducing friction. What do you suggest we do in terms of the increasing incentives and kind of increasing the pot of gold that you get once you kind of come over the friction costs?
Okay, so I think Drac is completely on track here. So let's assume you start out with what I believe is you're going to start out with basically like a 3x margin platform. Once we can go over UI, UX, that's a big component. I don't want to go into that right now, but then it's about setting up kind of a point system, the gamification of that, to further, unlock higher levels of leverage. Maybe you start at 3x, and as people climb up the ladder, they can get up to 5x. So I think some of those very base things are what you're going to want to start out as. And then, as that develops, I do think you guys should turn your focus to, what kind of derivative products you can offer. Because ultimately, active retail, especially in Bitcoin, and really universally is a bunch of degenerate gamblers. So we want high leverage. I'm part of that, by the way. I'm a self-proclaimed degenerate gambler. So we're looking for products that we can, maximize the movement, volatility movement with leverage. So then you start to look at futures, options, some other complex products. I will actually give a nod to BitMEX recently. They got a little bit, I think, diluted as they had like 5 Bitcoin-related contracts, and now they're trying to pool it to one and offer there is no settlement. They're just paying the people that are short more or less like a swap fee, like they get the credit for the swap fee, and the people long are getting debited the swap fee. So, I mean, there are synthetic products that are being developed that I think will mature and are interested, that active retail has a direct interest in them. And that's where your flow is going to come from. I think the institutions will love that because they need to feed off that flow to make profit from their market making activities.
This sounds a little, is what you're talking about with BitMEX, is that a little bit like what BTC China was doing with the kind of negative carry, positive carry, there's no settlement, it's just kind of a continuous product, synthetic product?
Yeah.
Or is
It has a similar feel. I mean, BTC China is trying to do away with socialized losses in their own way. That's a whole different discussion. I mean, I definitely praise them for trying something new. I'm not extremely a big fan of what they're doing, but I can't really knock them for, taking the time to develop what they have. But yeah, I think the move has been kind of away from some of the confusion around futures that aren't really futures, that are more of like parimutuel betting, which isn't, I don't have a problem saying that. I guess some of the exchanges don't like that stigma and go to great lengths to try and distance themselves from it. But BitMEX is really running into a liquidity problem. They have fragmented liquidity, and they're trying to pool it in this way. So I give them credit for doing that. The product isn't live, so we don't know the results of that. I think their biggest issue is they have basically all active retail, highly degenerate gamblers, and they being incorporated in the Seychelles, not having the regulatory stuff in order, they aren't able to attract the institutional clients like yourselves. So, there's a balancing act there where there's a lot of people coming there for the leverage, but the spread is so wide. I open a position and I'm down 25% immediately on my collateral. It's kind of an issue. So, go ahead.
No, and this is our view of the value of an exchange. I mean, our goal is to collect lots of customers that are fairly diverse. So the retail buyers, the kind of retail-focused brokers, the corporates, the institutional traders, and market makers, and the high net worths. And now the segment we're going after, which is a large segment, is the retail traders. And the goal is centralize the liquidity, although Bitcoin is all about decentralization, and that's what we're in support of, but centralize and standardize the liquidity so that everyone can come together and trade with each other on a fair, transparent, standardized marketplace and take advantage of the kind of liquidity amassing effects of that standardization. So that's our goal. We want to get the institutions playing with the degenerate gamblers, playing with the traders, playing with the corporates, playing with the brokers, and everyone trading Bitcoin.
But there will be a different compromise point.
Yeah,
of that.
Of course.
So there'll be because you'll have different limitations put upon you because of your customer base. But and hopefully that leads to a separate sort of equilibrium point, which is still compelling for all the players in the market.
Yeah. Let me ask you a more. I don't know if it's really like a philosophical question or just kind of a more general question. Have you guys Do you guys understand kind of the socialized loss system? Have you explored it at all? What are your feelings on it? Because the only reason I bring this up is, I mean, Drac has been here for a long time, and he knows that, especially from the West, we tend to get a tremendous amount of pushback, and surrounding the socialized loss system, which is the system that allows the high leverage to be offered. With not putting the exchange itself at risk to those losses. And I even see surveys sometimes that say, retail trader, do you like socialized losses? And it's kind of, it's framed in a really terrible way. It's kind of like, do you like being hit in the face with a baseball bat? Well, no. I mean, but would you rather be hit in the face with a, Mack semi-truck? It's kind of like, nobody wants socialized losses, but they understand that the system is actually a pretty great system overall for offering high leverage products. And I look at OKCoin and their futures platform as a huge success. There's plenty of things to criticize, but I think the people they went after as what they thought their customer base wanted, they provided the product. So I guess kind of what's your thoughts on just maybe that system in general? Is that something you guys would like to explore, or just kind of open book, like what's going on in your minds with that?
So open book. So we are familiar with socialized losses, and we're still in the sort of development phases of the margin trading platform, and how you handle potential losses is obviously a key part to this. And we spent a lot of time looking at differing options. Socialized losses was one of them, and we've had a lot of conversations internally about it. There are differing views internally, just like there are different views in the community, I think. The conclusion we came to right now was that, one, we have the lenders who are willing to effectively take the hit in the unlikely event of a run on the market, and initially we are starting with low levels of leverage. For those reasons, we don't need to put it in place.
We don't need to put it in place
because you have a lender who's willing to take the hit in the worst case. If we were to look at leverage beyond the levels that we're looking at, or when we are to look at that, that might be something that we come back to and look at.
There's a lot of, I mean, we've had some internal discussions and debates and stuff, and I don't really see how you offer 20x like leveraged futures without doing socialized losses.
Sorry, go on.
Well, yeah, two things actually, and it'd be good to get your thoughts on both of these. One is, I don't know how anyone can do 20x leveraged futures without doing socialized losses, and the second one is
how to do it for a spot market.
Yeah, how to do socialized losses on a spot market, because it's interesting, right? The purpose of socialized losses, at least in terms of what we kind of understand it, kind of being rookies into the day trader market, is to allow for vastly more leverage levels, way more than you could do without socialized losses. But the question we had is how to do socialized losses on a spot market if we were looking to do it for the purposes of increasing the leverage ratios.
Well, actually, I mean, you guys are right on as far as, I mean, the socialized loss parimutuel betting system was created to offer those kind of leverages that otherwise no centralized clearing party would want to take that risk. So it's been brilliant in providing that, and I wouldn't want to see that applied to a spot exchange. I guess a spot proper exchange, if that makes sense, because I think we're starting to see, at least through like BTC China, they call it a pro exchange. They don't call it futures. They don't call it kind of a derivative even. They're just trying to kind of paint it as spot with 20x leverage, which isn't really accurate either. But I would rather, those kind of be separate entities. And I think Bitfinex has done a pretty good job of balancing that, where, you're starting to look at maybe 3 to 5x, and beyond that, either your creditors or the exchange doesn't want to hold the risk of liquidation losses. So once you start to exceed that, you're going to need to go to some system that is socialized loss in its way. Not to say that, BTC China has a way of doing it that's not really socialized losses, but it's somebody is still having to kind of pay for that higher leverage on an e-liquid instrument, if that makes sense.
I mean, it's interesting because, one thing we're interested in about margin is the fact that it will actually bring more liquidity to our existing book and the existing segments that we have. But what you're saying is, to get to these super high levels, you actually have to separate
the liquidity.
Yeah. This is reminiscent of some discussions we've had.
Yeah. I do see what you're trying to say as far as plugging in. It still can add liquidity with having a separate book and a product based upon ARB and some other market maker functions that they'd want to go between futures that are offering a premium or a discount to the spot trading. So do take that into account as well. That might be a discussion you want to have with some of those guys. But yeah, eventually what you're looking at is, I'm sitting in the seat of degenerate retail, and yep. I look at it and I'm saying, what incentive do I need to go to this platform? I'm not from the UK. I don't have a huge interest in GBP. Sorry to say, guys, but I don't have a lot of incentive to trade on a 3x platform offering that. Those things could change. I'm not saying that maybe if Great Britain exits or something and there's some kind of BTC GBP ARB that I can do, might bring me in. But as far as interest in that product, I'm not extremely interested in that. So getting other products that have the kind of risk appetite that Bitcoiners want will get those people trading there. They will also trade or exchange margin from GBP back to BTC. So you're adding basically user base. And that's really what active retail is going to look for, because I still have a Bitfinex account. It probably make one trade every couple of months on it. I used to trade there every day. Most of my trading ends up on OKCoin on a derivative product. So they're still getting some liquidity from me. There was a time where they got all of it. Now they get 1/80th or 1/50th, and that was because they never moved with the leverage. They kept it at spot, and the majority of my funds have left there. So that's kind of what I'm looking at. Is I just try and see where retail has, it's like the momentum, the inertia, where it's going and where it's going to continue to go. And they're not suddenly going to have a huge interest in trading a 3x spot product, if that makes sense.
Okay.
Be interested to get Drax's view as well, in case it's different. Maybe it's the same.
And what are the concerns people have with socialized losses versus the other, and what are the other options? How do you think it compares to other options in your mind?
Well, I think if you're talking about socialized losses on a margin trading platform, then you're doing it wrong. It's not a platform I'd want to trade on. So, and the reason is simply that your book is too liquid to actually handle liquidations, or your algorithm's not right. So once you're up into high leverage products, 20x and whatnot, then I would expect those to be synthetic products personally, kind of like OKCoin futures, that kind of thing. So yeah, I think the discussion of socialized losses is kind of wrong for what you're currently discussing on the margin trading platform.
Yeah.
So this is when it gets to derivative products, much higher leverage.
Much higher leverage. If you can't clear out people who've taken the wrong side of a trade at 3x, then without a margin cascade and losses, then there's something wrong.
Oh yeah, we're getting ahead of ourselves in terms of like we're always gonna kind of think where do we want this to end up, and what do we want kind of in terms of the longer term future.
So I think the other question, I think the question though was in terms of attracting customers. So okay, Vix is right that there is a huge retail following who are after high leverage. They're after big risk. When Bitcoin is going sideways, they're going into highly leveraged forex. Or if altcoins go crazy, like they did recently, then they're straight off to Polo and wherever to trade their altcoins, which are effectively a high leverage product. It's a high risk product. But one way you can mitigate this and get more people, because I think out of a crowd, you've got high risk takers and then you've got more conservative takers. So the more people you get on your platform, the more likely you are to have more volume, right? And one of the best ways to do that is with an affiliate program, because there are quite a lot of us who will, as part of what we do, we also refer people to exchanges, and that in itself is a business model, a revenue generating model. So, and it does your marketing job for you. So, I think you really want to consider getting as many people onto your platform by removing as much friction as possible, which means letting people sign up at the very least, and introduce some kind of affiliate program where there's an incentive for people to sign up because they get a reduction of fees, say for the first month, and there's an incentive for people to refer to your platform because a percentage of the fee goes to the referrer. That kind of system would work very well.
Okay,
agreed.
And every big exchange has it. OKCoin has it, BitFinex has it. So.
Yeah, I think, just from a kind of a higher level strategic viewpoint, I think some exchanges, and I do understand their concern, is when they see the active retail demographic and clientele, they tend to create a very kind of institutional looking interface, which I don't have necessarily anything against. It's just the demographic ends up basically being a lot of casino players, and a lot of those things could go a long ways in courting active retail that I think the exchanges have avoided doing just because they don't like that stigma associated with it. But I'm not really suggesting this for CoinFloor at the moment, but in prior Hangouts, Drac was on the one with BitMEX, and they released an A50 futures product, which kind of mimics the Shanghai Composite or kind of China stock market, and nobody traded it. Nobody trades it still. And we said, you need to offer like deposit bonuses. There needs to be some kind of incentive for people to play with this product that they don't really, are putting their money at risk initially. That's kind of the way that active retail works. Is if you just create a product, we're not going to show up. We need to basically have some of those kind of VIP-like experiences. We don't have a problem working for them, and that's the gamification process, putting in tiered VIP levels. This goes to the same on the trading level as the affiliate level that Drac has indicated. I don't really like an affiliate program that's like, yeah, you get $5 for somebody signing up and making a deposit. To me, no interest at all. I need lifetime payouts. I need incentive to get more people there. If I start out at only getting 10%, if I bring in 25,000 in revenue for you guys, does that get me up to 15% or 20%? There needs to be incentive there, as well as I think that's what's starting to come around is multi-level tiers as far as the more people I bring in, the more revenue I bring in. the more tiers down the kind of downline chain I unlock. These are like really successful business models in an affiliate program, from what I'm seeing. I don't know, Drac, if you have anything to add to that.
Yeah, I mean, basically, yeah, I full agreement. You've just got to, you've also, I mean, I don't think you guys have any objection, but if you were a cold corporate, who has worried about their corporate image, you have to drop all of that, and realize that you're dealing with humans. What you need to do is deliver, like a solid platform that works, doesn't, if I place an order, it matches, the thing doesn't go down. You have uptime, when I make a withdrawal, I get a withdrawal. If there's a problem, you guys communicate it, if you have planned maintenance, you communicate it. If the maintenance is going funny halfway through, then you let us know in advance. Just that kind of, that's what we really care about, because at the end of the day, we're putting our money on the platform, and if we make any losses, the losses need to be our own fault, not the fault of your API failure or your site going down or DDoS or whatever rubbish excuse there is. And then everything else is gravy. If it's nice and shiny, if it allows me to customize my avatar or whatever, if it has a spinning wheel promotion, none of this really matters for the corporate image. What matters for you is that your exchange works and you deliver, and you have liquidity, and at times of high volatility, everything still functions. That's what really matters.
But that does matter to us, though. I mean, like, we need some of those incentives in place.
Right. Yeah, that's what I'm saying. That the incentives, if you have shiny, VIP tiers which are going up, what I'm saying is that, some companies are like, oh, we can't do that because that doesn't look so professional or whatever, and like people like those things, and there's nothing wrong with it. What people really, what they don't like is a failing platform. Bitfinex went through a horrible period where it was just unusable. You had no idea if you put your money on there that whether the thing was gonna collapse, or work or freeze, or you just had no idea. The exchange was fine; they were an honest exchange, but at one point they just didn't function. So that's what matters. From as a corporation, as a as a successful business, your image has to be we're reliable, we're solid, everything works, we deliver. And then for the customers, you can be you can provide all the incentives and the shiny stuff, and it'll work very nicely. It'll be a fun place to be.
Okay, well, I think that's a good way to summarize it. We have to focus on the basics first, and then just try to provide a compelling experience for our users. And we try to do that, and we'll continue.
All right, guys.
This has been really valuable.
Yeah, really appreciate you guys coming on the Hangout today and giving us everything that's developing there over at CoinFloor. I want to wrap this up now as we're going a little bit over the hour mark, and I like to be honest to my listeners and keep it at about that. So I really want to thank you guys for coming on. I want to thank Drac for putting all of us in contact, as well as being a great co-host. So until next time, we'll talk to you later.
Sounds good. See ya.
Bye.